In this video, I'm going to be going over 2 trade breakdowns that I took throughout this week, and I thought I'd go into that now. So to begin with, we'll go over the first one, which was a long, and it was a winner, and then I'll be going over the loser in a second. And the long, which was a SFP of these lows here. So if we just go on like the 5-minute, okay, 5-minute time frame, SFP of these lows here for a nice, really big rally to the upside. Now I'm going to tell you how I first of all executed this, and what percentage of this move did I capture, and did I make any mistakes on that? Because I think it's important to note that as well. You know, winning trades doesn't necessarily mean I did everything correct. Quite a big common misconception as well is that if you take a loser, it doesn't mean you necessarily did everything wrong. Okay, so let's begin. First of all, the level of interest. Why is this a level of interest for me? Why is this a level of interest for me? And in simple terms, I've gone over this many times before. Last low, gap in price action to the next swing low, it's all the way back down here. So you've got this massive gap. So you kind of do see this dip into the level. You know, you don't want to see acceptance into this, otherwise you're seeing this whole thing filled. SFP before a nice rally to the upside. Now, if we head over to XO charts on the execution standpoint of things, and also bear in mind at the time that we had seen like a really big move to the upside. So I was thinking, well, I was expecting continuation. You know, if you lost this, it's retracing the whole thing. Okay, so let's go to XO at the time, and I'll tell you where I entered. Okay, so over to XO now. Let's maximize this screen here. And you can see down here, this is that low. So you have this low here. This is the low I'm referring to here on the right hand side. And also disregard the wicks on the open interest. So only reference tools to bodies. There's currently a bug on XO charts. So yeah, there's, you know, we've got the wicks right now, but we've got the bodies. So reference tools to bodies. There is a drop off in open interest. So again, just a drop in open interest, people closing positions, people getting stopped out. Okay. And that's also shown by the the harsh red negative delta coming in on the delta cluster towards the bottom of the candle. Okay, you can really easily see that. A spike in volume, liquidations coming into your level, okay, and also a trapped value area. So there's quite a few different factors going on here. And I was actually I was fairly hesitant on taking this trade, but I thought, you know, I've got the statistics behind these trades working out. You know, what am I for trader if I've got a strategy on the edge and I just don't stick to it even when it provides itself? I just have to execute, right? So we've seen prices closed here, which is opened here, wicked all the way down, closed here just above the value area. So we've got a trap value area, point of controls down here, spike in volume, extended delta. Now it might not be as obvious in this one, but the delta is extended where you have negative 22.7 million. Okay, and then also on the delta yeah, so you've got 22.7 million on the delta, final delta, and on the delta minimum, right, you've got 33.7 million negative delta. So there's a discrepancy there between this delta and the final delta minimum and the final delta. Again, at the lows, you're referencing towards the delta minimum and the final delta to recognize any discrepancies there. So I'm like, okay, there's a lot of you know, you'll see all these trades taken into that I always take. They're all fairly similar. SFPs, spike in volume, spike in liquidations, extended delta, trap value area, level of interest, you know, liquidity being taken. And this is what it was here. I entered, invalidation being, you know, below the value area low of this candle. And again, some certain characteristics of a trade like this is that you generally would want to see it run much further in the opposite direction quickly. You know, I don't like seeing, if, for example, I take these type of trades, in particular with these certain criterias, that price dwindles around and drops down lower too much, test tools the lower echelons of this low here. Otherwise, the likelihood is stopping you out. You do want to see generally quick follow through, which you did see a bit of sideways price action here, but it never dropped anywhere below the point of control of that candle itself. Anyway, execution here, and I actually got in on this green candle here, by the way, because obviously I waited here, and then I have my limit order. I get in at limit every single time, so I limited in here, just about, not towards the bottom end of this candle here, but it was just here, roughly. Thought I'd be very concise about that. First take profit, okay, if we just head back over to trading view, okay, was these highs here. Okay, these highs here, you know, captured 72% of this profit here, 72% closed here, okay, and I was prepared for this to come and stop me back out. It didn't, you know, it was actually very close to coming back and running my break-even stop. But it didn't, it continued pumping. And at that stage, I thought it's going to be heading a lot higher. And I was looking towards like at least 36k, liquidity being taken. Okay. Because obviously you've seen the SFP, 28% remaining. It moves up. You then take 28,000 or 30, God, my words are going here. 36k liquidity here. right? Round number on the right hand side. So 36k liquidity taken. It doesn't make sense to front run it. So I didn't even take any more profits here. No profits further taken. Okay. Because you can see here, if you're looking on the top left hand side of the screen, when I'm hovering over this candle, $36,000 to the dot. There's liquidity above that on derivatives, and on spot. So this pullback was just for buying. I didn't buy it, but again, it just made sense to not close my long there. I then saw this run of liquidity heading into the night. And that is where I then fully actually closed out this trade. Now, looking back on hindsight in this trade, I could be like, well, yes, I made a fantastic, it totaled up to be like a 3.84 hour on this trade. Okay. Which is great. But also on the other side, is there anything I did wrong or could have done better? And what I would say is yes, especially in such a trending environment at the time, it would have made sense to not fully close it, or maybe not take such an aggressive take profit at that high there. And that was it, continuously trailing the stop in that case probably would have been the better opportunity. But I was very much on the aggressive side of taking profits, in preparation for maybe larger volatility where we do see a large drop to the downside. Anyways, that was a trade one. I won. And great. But then the next day, I'm going to take another trade. And let's get into that one now. So hopefully that one made sense. Let's break down the second trade. And it was this SFP here. Okay. So if I just highlight this, we'll go on like the 5 minute. And again, most of my trades are executed on the 5-15 minute time frame. Those two, you won't really see me use anything else unless I'm using the 1 minute for structure. And that's using the power of two that I'll probably cover in another video anyway. But yeah, so you have SFP at this high here. This one actually, I created this plan from the morning. I was very adamant on it. And again, in this one, this is kind of the methods I was saying before was, even if you lose a trade, you didn't necessarily do anything wrong. There might be something to learn from it, but it doesn't necessarily mean you need to recreate and scrap your whole model because you've lost a trade. That is not how it works. Okay, so you put in a high at, can't really see on my screen, 10:20 a.m. the highest put in. And then we see an SFP of this high in New York session. So this is London session high at the time. London session high, SFP within New York session. Not only that, but it's also a run of, at this point, $37,000. Okay, if we just put in 37k, this is like a primary run, and also on the Coinbase chart, this is like a bigger run of 37k. So you've spiked through it once, then you spike through it again, taking that liquidity above 37k. And I'm thinking, okay, this can pull back now. I was looking to take profit on this trade down here. Okay, if we were to see a move down here, I was looking, before getting too confused, I was looking for something along these lines. I got a really good entry on this actually, and I was looking for something like this where I could, get a 3R out of it on the initial TP. Price just pulled back, made a higher low, and then rallied up. But let's talk about the execution of this using, for example, XO charts. So if we just head over to XO, okay, and you can see here, this is the candle itself. Again, disregard the open interest, but this is extended delta to the maximum. And also, I want to talk about this prior high that was made on the chart, and why I didn't like this one, and why this one was more suitable for me to be trading. So look at the candle itself, SFP of the high, but look at the high itself. Look at the cluster shading. It's all red. Okay, when I'm looking for a short opportunity, I don't want to see all red at the high of a candle. That shows a lot of people are aggressively actually selling at the high of a candle. The delta's red, right? That's not great. I'm expecting higher prices at that point. Even this would have been a potential nice long opportunity to offer itself. I didn't get involved here. But again, bear that in mind. You don't want to see red at the high. It shows selling. I preferably trade off of trap traders, reversals, people getting stopped out, etc. In this case here, you can see again, disregard the value area. Price wicks above that high. Again, it's the 15-minute time frame. Look at look at the difference in delta shading. A lot more green at the high here. A lot more green, and that is what you generally want to see. Okay, and in the time I anticipated a trap value area, I did not get a trap value area trade set up. That's not what happened. But nonetheless, you saw a lot of buying go into the level and a close below. So I'm thinking, okay, London high swing failure pattern. You saw, I classify this as trap traders or people getting stopped out like aggressively. London high being taken out, 37k, larger liquidity, spike in volume, extended delta. This was like the massive thing as well for this. When you see something like this, the likelihood of extended delta is like drastically increased, because you can see it's literally just comparing what's happened at the high of the candle versus the close. Where it's closed red, there's a lot of buying at the high. The final delta is green, still green, but look at the discrepancy between the delta and the delta max. Again, when we're looking at the highs, this is different now. So you've got the delta max. There's a discrepancy there, and that's where I'm shorting. And I'm saying, okay, invalidation above that high, and I targeted down towards those lows I mentioned. Very, very simply, I got stopped out of that, looking for those lower prices. But that doesn't mean I did anything wrong. The only thing that I could have said in this case where, certain things were potentially missing were there wasn't many liquidations really as much as you might have expected. There wasn't a trap value area, but those aren't necessarily sole factors where I would take a trade just because I see those things alone. Okay, so hopefully that makes sense. Again, on this one, -1R, plus 3.8R on the other one, and I'm going over the trade management in that case. There wasn't really much trade management in this case either, because I just got stopped out of it. So yeah, hopefully that made sense. Hopefully you found this valuable. Again, check out the Twitter. I'm going over tons of different strategies, and not just strategies, but my thinking behind different sessions and statistics themselves at Luxury with an extra R on the end. Hopefully you found this valuable, and I'll catch you all later.